Analytics has a very powerful risk profiling tool on the system, and it will map to any investment solution you use. So if you're an advisor building bespoke portfolios, using multi-asset funds, outsourcing to an MPS provider, it doesn't matter. The system will work with any of those solutions. So to run through how this works, it's a pretty much end-to-end system. And it works on the basis that you have to create clients in the system first. That's always your first port of call. So the example we're going to be working with throughout this demonstration is a client called Louise Robinson. So I've built her pension on analytics already. So I've got a portfolio called Louise Robinson Pension. That's what she invests in at the moment. And I want to run a risk profile on Louise and perhaps suggest a new recommended solution for her going forward. So I've got to build her as a client in analytics. I've got her as a portfolio. Now I need to build her as a client. So on the left-hand side, under Client Tools, click on Client Manager, and it loads up a very simple screen where I can build my clients. So you only really need to put forename and surname. So if I put her forename, Louise Robinson, and you can put date of birth and email address. It's not mandatory. I would say that with the ATRQ, you can email it to a client, so it will save yourself a bit of time. If you pop her email address in there or your client's email address in at the bottom, it means that when you do go and actually physically send, in this case, Louise Robinson an ATRQ, it will know of her email address and it will automatically send that across to that email address specified at this stage. And then once you're done, just click on Add Client, and that will add her to the system. And now I can come back to analytics main screen and start the ATRQ process. Now back on the main screen, I want to create an ATRQ for Louise. So on the left hand side, again, go back to Client Tools. This is an old attitude to risk questionnaire we have on the system, so ignore that. Most people now won't have that version. They'll be on the new version, the investment planner. So you'll have Client Manager and Client View, all clients. So if you click on this one here, it flips the screen and allows you to start creating risk profiles for clients. Now, the first time you create a risk profile for a client, they're going to be listed alphabetically in here. I'm just going to go and find Louise by typing in her name at the top. Should find her for me. And because I've not filled out a risk profile for Louise before, I've got a little plus icon next to her name that will automatically load up the investment planner. However, if I have already created risk profiles for Louise in the past, I can just automatically load up the investment planner. And again, just a word of caution, this relates to our old questionnaire that most people no longer have access to, and so does that button. So don't let that confuse you. In this case, I haven't filled out a risk profile for Louise in the past. So as I said, that's why she's got the little plus icon. So I can click on the plus icon and start the risk profiling journey. So this then creates a brand new tab for me. It only really expects 2 bits of information. What's the plan called that I'm creating for Louise? So let's just call this Louise Robinson pension plan. What tax wrapper is it? Doesn't really have any bearing on the result. It's just really for housekeeping. You might be doing 2 risk profiles, one for the pension, one for the ISA. So it just allows you to create 2 risk profiles, and as I said, in terms of housekeeping, allow you to separate them. So this is obviously a personal pension because she's got a portfolio in the system called Louise Robinson Pension. And does she have an existing portfolio? Now this, again, isn't mandatory, but if the client does have an existing portfolio that's built into analytics, you can attach that existing portfolio to this new plan we're going to be recommending. Now, in this case, she does. If she doesn't, I could have just skipped this bit. But if you click on the change button, it loads up all of the existing portfolios currently sitting in your analytics account. And again, if I just start typing in Louise, surprise, surprise, there she is. So I can now attach her existing portfolio to that plan and save it and move on to the next bit. So the next stage is to actually complete an attitude to risk questionnaire with a client. Now there are 4 options you have here. You can skip it entirely because actually in the eyes of the FCA, it's not mandated. It's not a mandated process to use a questionnaire. You just have to have a conversation of risk. So don't feel you have to fill in the questionnaire. You can skip it and just set the risk level yourself. Admittedly, not many people go down that option. You can print the questionnaire if you want to print out a kind of a PDF blank version of the questionnaire for the client to fill it out manually with a pen or pencil. You have got that option. Admittedly, again, that's not that popular. The 2 popular options are really the first 2. Am I with the client in person and I want them to complete it online in front of me, or maybe I'm on some sort of Zoom or Teams call where I can get them to complete it in person digitally, or would I like to email them a link for them to complete it themselves? Let's just have a quick look at the email facility. Now, when I set up Louise Robinson as a client, I didn't actually put her email address in on this example, hence why her email hasn't appeared. But had I have done that, every single time I thereafter send Louise an ATRQ via email, her email will automatically pre-populate for me. I can put my advisor name in there. The email address is taken from the account. That's the email address it's going to be sent back to, just to simply confirm that the ATR's been filled out. And this is the email they'll ultimately get. So the subject matter up here, again, can be changed if you want. Again, this is just the name of my group. Invariably, an advisor's group will be the name on the email. So if my company is called Joe Blogs IFA, I would just simply say Joe Blogs IFA. But again, you can edit that and amend that. This is the actual email they'll receive. And again, you can mess around with the wording if need be. And then the client, once they receive that email, they just click on the link in the middle. It will take them to the ATRQ. They fill it out independently of the advisor. And once complete, as I said, that will send the advisor an email just to confirm that it has been completed. It will even tell the advisor then and there what the results were. And it will offer them the ability then to jump into analytics and start reviewing the results and suggesting some recommended solutions, which we'll get onto in a couple of minutes. But I'm just going to work my way back to actually show you what the questionnaire looks like. So if you wanted to move away from this screen, just click on back and it will take you back to the screen we were on before. So coming back to this main screen, the example I'm giving here is I am actually going to take my client through a questionnaire process online in person. So I can click on Start Questionnaire and it loads up the 14 question questionnaire. And if you scroll down each option with the client, it's got auto scroll actually on it. So every single time you select one of the options, it scrolls automatically down to the next question. They're all fairly standard based risk questions. If I just work my way right the way down it, I'll just select essentially the middle option on each one. And the final question's really, really important. And it's often lacking in a lot of questionnaires. And I'll explain this in a bit of detail shortly, but it will ask the question what their investment term is, because that should heavily impact the final investment solution they invariably end up getting. So have they got a short-term, a medium-term, or a long-term investment? Now I'm going to pretend I'm Louise filling in this questionnaire, and I'm going to say I've got a medium-term horizon, and click on continue. Now the results screen will load up, and this is the same results screen you'll be presented with if Louise had filled this out via an email and then you jumped into analytics to have a look at the results of it. So the results are in, and understandably I selected the middle option pretty much with every question. So she's considered to be a 3 out of 5 risk profile, and because she's a medium-term investor, she gets this set of results underneath. There's the risk description and there's the asset allocation. Now it's important and interesting to point out that it always looks like a narrow range of returns doing a 1 to 5, but because we take into account the investment term, the level of solutions or risk profiles you have are a lot broader than visually you can see here. Now, just to put that into perspective and to explain that in a bit more detail, we work on a 1 to 5 basis, risk profile 1, 2, 3, 4, 5, but because we've got short, medium and long investment terms, we technically have 15 different outputs. Now, most questionnaires out there in the market at the moment generally just tend to work on a linear scale, 1 to 10, 1 to 5, 1 to 100. But it doesn't really make any difference dependent on the investment term. So if I've got 3 clients that I've given a questionnaire to and they all come out as 5, well, that's marvellous, they're all balanced, but actually one of those clients has 5 years to invest, the other's got 15 and the other one's got 30. So yes, they're balanced, but they shouldn't all get the same investment solution because one can invariably take a lot more risk than the other two because of their very lengthy investment term they're working with. So that's why we've kind of built that intrinsically within the score. So you as the advisor doesn't have to worry about that. When you get the results back and say someone's balanced, you don't then need to think, oh, actually, because they got a lengthy investment term, should that go up to adventurous? That's already calculated for you. So in this case, Louise is a medium-term investor, is 3 out of 5, and hence why she's got those set of the results. But understandably, when you go and explain this to the client, they're unlikely to know what a 3 medium is or a 2 short, etc. So to help you explain that to the client, this can be stitched into the final report. There's something called a possibility of losses document that's worth having a look at now. So the possibility of losses document will just explain what a 3 medium actually is. So when you're now discussing capacity for loss, knowledge and experience with a client, which we'll come on to in a couple of moments, it pays to potentially have something like this in front of you that will explain to the client, look, you've come out as a 3 medium. Here's in layperson's terms what it means to be a 3 medium. Here's the portfolio journey. So had you been taking that level of risk over the last 20 or so years, these are the highs and lows you'd have experienced over that 20-year term. And this is a possibility of losing set amounts in any given year going forward. So hopefully gives them a better understanding as what it means to be 3 medium, how much risk they're taking by being classified as a 3 medium, and it hopefully helps your discussion around capacity for loss, knowledge and experience, which again can be documented within this system. So if we just come back to the other screen and fill out capacity for loss. So back on the results screen, it's just this little green button here, capacity for loss. So if you click on that, it will offer you some additional capacity for loss questions. And this part of the system, again, isn't mandated. We don't force people to ask these questions, but in the eyes of the FCA, the regulator, they want advisors to be having that sit-down discussion with the client. This shouldn't be an automated process. That's why it isn't built into the risk profile kind of proper initially for the computer to do it. This has to be a sit-down conversation between the client and the advisor to fully discuss the ramifications of being considered, say, a 3 medium and what is the client's capacity for loss, etc. Now, you might be having these discussions separate to this tool and you're documenting this elsewhere. That's absolutely fine. You can skip these. It's entirely up to you. But if you did want to use our capacity for loss questions, all you need to do is ask the client each question, a yes and no. It will suffice, and then a little box pops up at the very bottom and I can document and detail the discussion I've had with my client around capacity for loss. And if I just want to answer 3 of them and not the other 2, that's fine. The other 2 would just be left off the final report like they never existed. So next stage is knowledge and experience, so click on that once you're ready. That loads up another couple of knowledge and experience questions. Same process applies. Click on yes or no to each one. And again, I can document the discussion I had with the client around knowledge and experience. I won't disclose this or go into too much detail on this tutorial here, but under that settings tab at the very top, under risk questionnaires, it's all pretty self-explanatory. There's actually a bit for you to hard code your own questions into this tool, which is quite useful. So if there are any particular questions you like asking clients during your current process, or maybe you're using a separate system that maybe phrases questions in a particular way you quite like, there's absolutely nothing stopping you going into this tool and adding those questions as a second layer onto here. And when you're going through this with clients, those questions will also appear and you can choose to answer them in addition to the ones we've offered you, or actually as an alternative to the ones we're asking. So that could be stuff like drawdown, income, ethical questions, etc. So you can build your own questions in at this stage, just under risk questionnaires, and follow the prompts in there. But ultimately, once you've finished having that discussion with the client, you can just click on summary and again have a quick look at the results. So the summary page that loads up is basically the results page that we had a couple of moments ago. It's what the computer thought initially, having filled out that short ATR with the client. Now I've had that conversation with the client and further understand capacity for loss, knowledge and experience, etc., and so does the client. I've got the ability to contest these results. So before I agree to any of this, again, all my conversations have been documented here, I can click on yes, I agree if I've got nothing to change. Me and my client both agree that she's a 3 medium, so that's great. If I don't agree with the results for whatever reason, I can click on no, manually adjust risk result. And the screen that loads up allows me to toggle between different options. So maybe I think that the client had the right investment term, they got that bit right, but on further reflection, they decided to take slightly less risk, and therefore they're not happy with being considered a moderate investor. They'd much prefer to be something like a cautious. So we can start comparing the two side by side, looking at kind of equity content within the asset allocation and look at the risk description as well. And more importantly, you've got the ability to look at possibility losses at the top. And equally, this is a chance for them to potentially contest the investment term. Maybe they didn't understand the investment term question initially. And again, on further discussion with the client, you've decided to rank up the level of risk to long, or maybe bring it down to short. So yes, they're happy with being considered moderate, but then you want to change the investment term to short or long. So you don't just have to change you're not necessarily just fixed with changing the risk profile. You can actually change the investment term as well. I'm not going to contest the results, so I'm just going to come back and go back to the screen we just left. So coming back here, scrolling again back down to the bottom, there's always a little option for me to add additional notes if need be. In fact, it will force me to type a few notes if I do actually contest the results. But again, once I'm ready, I can click on yes, I agree, and that will set that risk profile in stone as now 3 medium. And now at the very bottom, if I scroll down a bit more, I've got a couple of options. I can PDF that ATRQ, get the client to sign that off if need be. But ATRQ's processes generally consist of 2 parts. First part is get the client in the right risk bucket. That's exactly what we've done there. Second part is find them a suitable investment solution that's mapped to the level of risk we're talking about here. So if you click on the green button, that's the next stage of the risk profile. So this is where the system is highly configured around your process. Now the solutions that have appeared in front of us here are simply the solutions that I've mapped myself in the past. But coming back to different processes advisors follow, maybe you're an advisor that follows your own in-house 10 model portfolios or 5 model portfolios or 15 models, it doesn't really matter. They will be the ones that appear here. So this is essentially your centralized investment process if that's what you're following. If there are some favored multi-asset funds you use on a regular basis, they're the ones that will pop up. And I'll explain the mapping procedure in a few moments. But if you consider this screen to simply be what your process looks like now, whether it's multi-assets, whether it's MPS, whether it's even bespoke, which again I'll come on to in a minute. This is simply showing you the solutions that you use on a regular basis. Now, if I was going to use one of these solutions, maybe I've decided that I want my client to go down the Life Strategy 60 route, or maybe one of these FE model portfolios, I can very quickly see whether it's relevant to a 3 medium, because it gives me this FE risk score band in the top right hand corner. So every single one of those risk profiles, 1, 2, 3, 4, 5, short, medium and long, all 15 of them, have a subsequent FE risk score band that we work towards. And this one happens to be between 45 and 55. And it's painting by numbers. It's not particularly difficult to understand. I'm looking down the list of my solutions and I'll know straight away the ones that are suitable for the level of risk we're talking about here will simply have an FE risk score between 45 and 55. And I know it happens that every single solution is suitable, but that obviously won't always be the case. Now, if I'm following a slightly separate process where maybe I want to build a bespoke proposition for my client, maybe I want to blend some multi-asset funds together, maybe I want to build a bespoke portfolio for a client based on the asset allocation we've just seen. At this stage, you can leave at the investment planner and come back into analytics and quickly build a proposed portfolio and map it into this screen here. Again, if you don't want to use these ones here, I'm just going to very quickly pivot away and explain how that would work. So if I come back into analytics by clicking the tab at the top here, and I'll need to come back to the active list, so click on Active List Pro on the left, and that will load up analytics. And I want to build a portfolio. Now, I'm not going to get into too much detail here about how I'd go and do research and filtering, etc., because that was already been covered off in previous demonstrations and tips. But ultimately, I've got Louise Robinson's existing pension, and now I want to create something a bit more bespoke for her. So there's a number of things you could do here. You could run filters. If you're looking for a decent multi-asset fund that takes a level of risk akin to a 3 medium, of course, I could simply load up a filter and search for multi-asset funds with an FE risk score between 45 and 55. That would be a good place to start. And again, if I wanted to build a portfolio around the asset allocation that's being suggested on that ATR, then again, you could probably use filters. That would be a good place to start, or go and look at sectors and start finding some good global funds and UK funds and property funds, and essentially just build a portfolio that you believe is relevant for that level of risk we've discussed, and to ensure that the overall FE risk score that is awarded to that portfolio you're building this client is between 45 and 55. So I'm going to cheat a bit here, and I'm going to pretend that the last 15 minutes I've just been slowly constructing, building and researching a proposed portfolio for Louise based on the information I've now gleaned from the ATR, and again assuming I don't want to use some of the standard solutions that I've already mapped into the investment planner. So right now I'm inside a portfolio. I've been researching, I've been finding some good funds. I'm going down the route of a multi-asset arrangement. I want to blend some multi-asset funds together, but again, this process doesn't change if you want to blend single manager funds together. It's exactly the same idea. So I found these 3 funds that I like. They all take a level of risk suitable, I believe, to the risk profile. I've constructed a portfolio, given it 40, 50, 10% split. And on the left-hand side, there's a little stats tab that will actually give me the current asset allocation of that portfolio. But more importantly, when I'm constructing and building and saving these portfolios, it also on the fly gives me what the current FE risk score is. So I've always got information at hand when I'm building these portfolios, almost like a design screen, to make sure that the asset allocation stacks up under the stats tab, and also the FE risk score stacks up again against what the ATRQ is telling me. So now I've built the proposed solution for Louise Robinson. I've got the portfolio now that I want to recommend to her. I want to use this one back in the investment planner. So all I've got to do is go back into it by clicking that tab along the top. Once back in the investment planner, I now need to stitch that portfolio that I've just built into it. So click on the settings tab at the very top here and click on something called portfolio risk linking. Now, I've always referred to this part of the system as kind of the back door, and this is what's happening in the background. And this gives you automatic access to all of the bands I was discussing a few moments ago. So there are the 5 short bands, there are the 5 medium bands, and those are the 5 long bands. And you can see every single time I click on a new one, it automatically adjusts and shows you what the current FE risk score band is on each one. And the one we were looking at a second ago was a medium 3, which is a moderate medium. And again, band 45 and 55. And if I want to open up that band to attach a new portfolio to it, you can just click on add edit, and that will load it up. Once loaded, that will give me all of the solutions that I had in front of me a few moments ago when we were trying to pick a decent solution for the client. And now I can add her new one by clicking this button. It loads all of the portfolios currently again on my system. So I can, again, to start typing in Louise. There's my Louise Robinson multi-asset propose that I've spent all that time building, and click on add portfolio. That will now add that to that risk band, and now it will allow me to select it for that client. If I close this down, to get back to the screen that I was on a second ago, I need to go right the way back to the start and click on clients. So that will again show me all of the clients currently sitting in analytics and the investment planner. I can start typing in Louise at the very top to find the client. There she is, Louise Robinson. Click on her, it opens her as a client up, and it shows me all the current plans currently being worked on. That's the one I was working on a few moments ago, so I can just simply hit continue plan. And it loads up all of the solutions again, pegged to that risk profile. And as if by magic, it's now given me my Louise Robinson multi-asset propose for me to now select and move on to the next bit. So again, just to recap, if I follow a very rigid centralized investment process, there will be very few occasions where I have to go off piste and build my own bespoke portfolio for a particular risk profile, but not everyone works and operates in that way. So we've tried to design this solution, this risk profile, to fit in with every single process. So if you are an advisor that wants to build on the fly bespoke for every single client, that's the way you do it. Get to the risk profile, skip back into analytics, build the solution based on the information you've learned back on the investment planner, and then stitch that new portfolio back into the risk profile and get yourself back to this screen. And now it's again up to me. What solution do I want to use for Louise Robinson to propose that she think about moving from existing into this new one? Well, it's invariably going to be this portfolio here. So that's the portfolio I now want to move ahead with, and click on confirm selection. Now it just asks me to confirm a few things. The investment date this is being recommended, and the display name. You'll very rarely, if ever, need to change that. So complete plan. That refreshes my screen and just gives me some last minute stats about the portfolio I'm recommending the client or going to recommend. And the final stage of this entire process to build a nice report to aggregate all of this data together, which is our report center. So everything we've built during that last 10 or 15 minutes is now available for me here to bind into one report. And when you first use the investment planner and the first few times you use this, you're not going to know what each one of these options represent. So just bear in mind, you can open them up very quickly and have a quick look at them before you decide to include them within a report. And you've got a little explanation as well of what they are. But ultimately, this is a switch. I'm trying to explain and to prove to a client why they should be moving from one solution to another. So generally, most profiles you run off, you're going to want a cover page on this report just to detail who's it for, who's it being provided to, and logos, etc. I'm of course going to want the ATRQ if I've completed one of those. I probably want one of those losses report as well that goes into detail about what a 3 medium is, or a 2 short, whatever the clients come out as, again just to back up the possibility of losses and capacity for loss discussions. This is a switch again, so I want a switch report. And because it's a multi-asset arrangement, I'm going to ask for all of the fact sheets and kids documents to be sucked out and added to the end of the report. But again, if I'm using some sort of model portfolio proposition, that's not necessary, so I simply don't need to select those. If this was an FE Invest model portfolio, one of our model portfolios, you'll get the ability here to stitch in our reports to this bigger investment planner report. And finally, if you want a signature page at the very end for the client to sign and date it, feel free to include that as well. And once you're ready, click on generate. And the final risk profiling report will again bind all of that information together and go in a particular logical order. So that you've got the cover page, again with your logo, name of the client. As you scroll down, that's the ATRQ, Louise filled in. Scroll down, that was the result. She came out as a 3 medium. Scroll down a bit more, that was the conversation we had around capacity for loss, knowledge and experience, all documented within the tool. Then a bit for them to sign it and date it if they want to. Underneath that, more information about the FCA guidelines and how this risk profiler conforms to every single one of them. That losses report has also been added, again, just to prove that you've had the discussion with the client about loss and the possible loss going forward if they do agree to a 3 medium solution. And in terms of 3 medium solutions, this is what we've now selected for Louise. So off the back of everything before it, we decided to go down the route of the Louise Robinson multi-asset proposed portfolio. Why? Because it was risk rated at a 3 medium, as the graphic shows, but it also shows Louise where her current portfolio sits. It's at a 2, so it's out of kilter. And if you scroll down, a bit more information as well about the differences between them, the difference in the risk, the diversification, the yield, the expense between the two, difference in the performance between those two solutions that are being recommended, and the asset allocation. And then scrolling on from that, essentially all the reasons why you're proposing that client sell the current fund holdings, which are these ones, into these 3 multi-assets. And because I wanted it, I've got all of the fact sheets and kids documents tied in at the very end. I just scroll right the way down to the bottom. It leaves me with a nice little signature page for the client to sign it and essentially confirm that they're not just happy with the risk profile that's come out as 3 medium, but they're also happy with the investment solution that's being recommended as well. So I hope you found that guide useful on the investment plan. If you've got any questions or need any guidance on not just that feature, but any feature within analytics, feel free to contact us via our live chat facility in the bottom right-hand corner. There's also a contact us tab on the left-hand side that will give you our phone number for the help desk, but also training and guides as well. So feel free to schedule a training session in with our training team, and there's a guide for every feature available in analytics.